Hello everyone, welcome back to this exercise series for chapter 7 of our Managerial Accounting course, ACCT 428. This is going to be the last and final exercise for this chapter that we go over, exercise 7-13A. So let's read the exercise together. The question says, the accountant for Jane's dress shop prepared the following cash budget. Jane's desires to maintain a cash cushion of $10,000 at the end of each month. Funds are assumed to be borrowed and repaid on the last day of each month. Interest is charged at the rate of 1% per month. Okay, and then we have the cash budget laid out for us right here for the 3 months, July, August, and September. And as you can see, all the numbers for July are available, but for August and September, we do have some missing amounts. So let's look at what's required here. A, complete the cash budget by filling in the missing amounts and round all computations to the nearest whole dollar. Although this might look scary a little bit, but you are not going to be required to create the cash budget from scratch. So that's going to make your life a lot easier. All you need to do is just figure out all of these missing amounts in the cash budget. So what I've done, I've already prepared or copied the data from the question here, just so I don't waste your time with this. Let's go over and see how we can solve this. Okay. For July, we have all the numbers. So let's go over them real quick. We have the beginning cash balance here of $25,000. We have the cash receipts for the month of July, $90,000. That gives us a total of $115,000. So that's the amount of cash that Jane's dress business is going to or is expecting to collect in July, right? So that gives us the total cash available of $115,000. In the other section, section number 2, we have the cash payments. They are expecting to pay $82,750 for inventory purchases and $27,250 for S&A expenses. And for interest, they don't expect to pay anything in July. If we add all of these together, we get the total budgeted disbursements of $110,000. Okay? So now for the financing activities, we need to take this amount, the total cash available, and subtract the total budgeted disbursements from it. Okay? So 115,000 minus 110,000, we will have a surplus of $5,000. Okay? Now notice that even though we have a surplus for this month, here it says that the business is expected to borrow another $5,000. Why? The reason being that the question told us that Jane's desires to maintain a cash cushion of $10,000. Okay? And this is a typical or a normal process that almost all businesses do. They don't want to have a low amount of cash, so they decide or determine a minimum amount of cash that they need to close each month with and open the following month's accounts having that cash available on hand. Okay, and for this business it's 10,000. So since we only have 5,000 surplus, we're gonna have to borrow another 5,000, bringing the total ending cash balance to $10,000. Now we want to do the same for the month of August and September. Some of the figures or the numbers are pretty easy to figure out. For example, the beginning cash balance here, which is missing, is going to be this amount, the closing or the ending cash balance from the previous month. Okay, since we already know this to be 10,000, that means the beginning cash balance for August must be $10,000. Okay, the same thing goes for September. Because the ending cash balance for August is also $10,000, that means September's beginning cash balance is also going to be $10,000. All right. Because now for each of the 2 months, I already have the beginning cash balance and the cash receipts, I can calculate the total cash available. Okay, so for the month of August, 10,000 plus 100,000, that is going to be $110,000. For the month of September, 10,000 beginning cash balance plus cash receipts of 120,300. That means the business are going to have 130,300. That will be the cash available for the month of September. Okay? So section 1 is now completed. We can move on to section 2. Section 2, we have 3 lines. One is payments for inventory purchases. The second is payments for S&A expenses. And both of these are already given to us for all 3 months. So there's nothing we are required to do here. The only amounts that are missing is the payments for interest expense for both August and September. And right now, we have no way of knowing what would be the interest payment for each of those months. We need to go first to this section right here and figure out what would be the exact borrowing amounts in order to know what would be the interest. Okay? So starting with the interest payments for August, since we know that in the previous or the prior month, the month of July, the business had to borrow $5,000, that means the interest here we can calculate, right? The question told us that the interest is charged at the rate of 1% per month, okay? So if the total amount borrowed is $5,000, that means the interest here is going to be 1% of that. So 5,000 multiplied by 0.01, that's $50. Okay. Now I have this column completed. I can calculate the total budgeted disbursements for the month of August. So I'm going to say on my calculator, 70,115 plus 30,280 plus $50. And that will be 100,445. Okay. And because now I have the total cash available for the month of August and the total budgeted disbursements, I can calculate the cash surplus or shortage. How do I do that? We take the total cash available and then subtract the total budgeted disbursements. So on my calculator, I'm going to say 110,000 minus 100,445. Okay. And that will give me $9,555. All right. That would be the surplus for the month of August, because the business is going to collect $110,000 in cash, and they're going to have to pay $100,445 in cash. So they will have some cash remaining. Okay? Even though they have some cash remaining, that amount of cash does not cover the desired ending cash balance that they want. Remember, they told us in the question that the business wants to have at least $10,000 on hand at the end of each month, right? So that means they're still going to have to borrow to get this balance to this amount, $10,000. So I'm going to say $10,000 minus 9,555. That will give us $445 that the business need to borrow in the month of August in order to get to the desired ending cash balance of $10,000. Okay. Now we move on to September, And again, we want to know what's the interest expense for the month of September. We know that the interest is 1%, but we need to keep in mind that the business had borrowed 2 times now. One time in July and the second time in August. So the total amount borrowed is going to be the total of these two together. So 5,000 plus 445. That will be 5,445. And then I'm going to multiply that by 0.01. Okay. On my calculator, it says $54.45. But because the question told us to round our numbers to the nearest dollar, as you can see here, round all computations to the nearest whole dollar. So that means we're going to round down to $54. If you round up to 55, it's not a big problem. All of these numbers are budgeted anyways, and it's just designed to give the business owner a better understanding of how the cash forecasted for that specific quarter and how much they might need to borrow and so on. Okay, but the nearest dollar here is 54, so we're going to round down to 54. And then we can calculate the total budgeted disbursements for September, $87,076 plus $30,716 plus $54. We will have total budgeted disbursements of $117,846. Okay. Again, we'll go back and subtract this amount, which is the total budgeted disbursements, from the total cash available. Okay, so we'll say 130,300 on the calculator minus 117,846. We will get $12,454. Okay, now notice for the first time we have more cash surplus than we want to have by the end of each month, more than the desired ending cash balance of 10,000, right? So in this particular month, in the month of September, we have the ability to repay some of the money that we have already borrowed in the previous 2 months. Okay, and that amount that we can use to repay some of our debt is the extra, the amount that is over the $10,000 that we want. So here we have 12,454. We can sacrifice these 2,454 to repay some of our debt. So I'm going to say 2,454. I'll put it in brackets because notice how we have the repayments in brackets. Okay. Now with this, we have completed the first part, part A of the question. Now let's go back and read part B right here. It says, determine the amount of net cash flows from operating activities Janes will report on the third quarter pro forma statement of cash flows. Now the net cash flows from operating activities include these amounts, the cash that the company will receive in each month, and we'll subtract from it the total budgeted disbursements because it includes all 3 categories. Okay, basically the operating activities exclude the financing activities, right? It does include the interest, but it excludes any cash flow that is generated or cash inflows that was generated due to borrowing, and any cash outflow that is generated by repaying some of our debt. Okay, so we exclude this part and we only consider the cash receipts from the 3 months, and we subtract the total budgeted disbursements. Okay, so based on that we can calculate let's say B. Cash flow from operating activities is going to equal cash receipts for each month. Let me highlight them for you. Okay, which are going to equal 90,000 plus 100,000 plus 120,300. That's 310,300. Let's write it first. 90,000 plus 100,000 plus 120,300. Okay, minus these amounts right here, the total budgeted disbursements, 110,000, 100,445, and 117,846. One 7 8 4 6. Okay, we already calculated this part here to be 310,300 minus, I will find the total for the second part, 110,000 plus 100,445 plus 117,846. That's 328 and $291. Okay, let's figure out the difference. 310,300 minus 328,291. We get minus 17,991. We're not going to write minus because this is cash outflow. We're just going to say brackets 17,991. So that's net cash outflow. All right. The last part, part C, determine the amount of net cash flows from financing activities Janes will report on the third quarter pro forma statement of cash flows. Here we have this portion right here, the financing activities section. Notice how we have this line, the borrowing and repayments. These are the amounts that the business had borrowed, and this is the amount that the business has repaid or is expecting to repay by the last month, right? So the net cash flow from financing activities is basically going to be the total of this. So 5,000 plus 445 minus 2,454. Okay? So I'm going to say part C, cash flow from financing activities is equal to $5,000 plus 445 minus 2,454. Okay, run the numbers on the calculator. 5,000 plus 445 minus 2,454. Okay, and that's going to be $2,991 net cash inflow. All right. When the answer is positive, it's going to be an inflow. When the answer is negative, as you notice here, it's going to be an outflow. So keep that also in mind when you run these numbers. Okay. Again, just to go over the exercise real quick, because it's an important exercise. And as I said, it might look a little bit scary, but it's very simple, very straightforward, because you're not doing everything from scratch. You're just filling the missing data. The cash budget, as we have learned, contains 3 sections. Section 1, which includes cash receipts, and section 2, which focuses on cash payments, and then section 3, which completes the other 2. This is for financing activities. So depending on the situation, if the business is expected to have a cash surplus or a cash shortage, then they can, if they have a shortage, they can cover that shortage with some borrowing. And whenever they borrow, they're going to have to incur interest, and they're going to have to make repayments as soon as they have the cash to cover those repayments. Okay, so we went over this and we have completed all of the details for the months of August and September. Okay, and then the second part of the exercise wanted to know what would be the cash flow from operating activities. And as I said, the operating activities would include the cash receipts, which we have here in this line, okay, minus the total budgeted disbursements, so all of these 3 right here, and we exclude from that any cash flow from financing activities. Okay, but then in part C, the question wanted to know the cash flow from financing activities in particular. We went back to our data. We've seen that we had borrowed 5,000 in the first month, the month of July, and then we borrowed another $445 in the month of August, and then in September we had some surplus, more than enough to make some repayments. So we paid back to our lender $2,454. So the net amount is going to be $2,991 net cash inflow from financing activities. Okay, that would be the answer to this particular exercise 7-13A. I hope you found this video useful, and if you have any questions, please do not hesitate to drop them down in the comments. And until I see you in the next chapter's exercise solutions series, I hope you guys have a great time. Take care.